Now let's take you through the stock market update. The Nigerian exchange closed on a negative note amidst sell-offs and buy interest as the benchmark all-share index depreciated by 22 basis points. The Nigerian exchange all-share index closed at 43,349.9 points to reflect a decline of 0.22% from the previous trading day and a year-to-date return of 7.65%. Meanwhile, the market capitalization decreased on Wednesday by 49.2 billion naira at the close of market yesterday. At the close of market yesterday, Wednesday, 17th November 2021, the stock exchange market value stood at 22.6 trillion naira from 22.67 trillion naira for the previous trading day. The market breadth closed negative as ABC Trans led 14 gainers and 24 losers, topped by Nemeth at the end of the day's session. And the stock market has advanced 3,079.18 basis points since the start of the year. And that's it from the stock market. I am Omobolanle Adeshuyi. It's now back to Frank.
Thank you, Omobolanle Adeshuyi. So let's now head back to Mr. Ambrose Omolion, CEO, Invest Data Consulting, who is standing by to give us analysis of the performance of the equities market yesterday, and of course some of the trends, latest trends in the market. Thank you so much for joining us, Mr. Ambrose Omolion, for your time. We appreciate you.
Thank you very much, Frank. Yeah, actually, the market for me is on the right mood. People might be panicking, but not exactly to panic. After the market has rallied, after an earnings season for the month of October, and there was a little pullback. This pullback for me is just for market to balance and move up with a stronger or higher momentum. But one is important here for investors to note is that if you look at that yesterday market performance, there was a marginal pullback in the market. The market lost 0.22. Don't forget that on Tuesday, market gained 0.53. That means what market lost yesterday was still, for me, still half of it. Because in technical analysis, when you see a bullish candle that is standing longer than the bearish candle, it tells that bull is still in control. Yes, yesterday we saw more sellers in the market, but the volume also traded yesterday was not as high compared to the day the market was up. It tells you that there are still kind of a mixed sentiment among the buyers and the sellers. But once we are coming closer to this MPC meeting that's coming up on Monday, Tuesday, and inflation data was released on Tuesday or Monday this week, investors and other fund managers are analyzing the implication of our inflation declining for good 7 months, and at the same time, ahead of all non-fixed income market yields, because inflation is still stood at 17.99, while most of the fixed market yields are below 15, around 12. That means anybody that is such investment or such instrument are still having a negative return. On that note, ahead of the MPC meeting on Monday and Tuesday, many investors are sitting on the fence to see the outcome of the MPC meeting. But for we and investors, the possibility of MPC meeting or committee members to vote for increase in interest rate is very slim, because one, inflation is already coming kind of converging with the interest rate. That means you can't increase your interest rate now that inflation is also coming down. No, for me, before it was indicated that they will increase the interest rate because of high inflation. But gradually, inflation is coming down according to world statistics. I don't know about what's in the market.
Let me come in quickly. Yes, of course, we've seen that number is dropping gradually, like you said. But the expectation is that the CBN may taper a little bit with interest rate. So how do you think these numbers and these expectations, how do you think investors are preparing to work with these numbers?
Yeah, investors will always look the way of equities that will kind of give you yields more than the inflation, and also more than what's obtainable in other instruments. That's for those that are designing investors. They know that there are some dividend-paying stocks that their earnings rate at headquarters are giving insight where they are and where they are going. On that note, such companies is where investors are looking at. But as you just said, the inflation and interest rate at this point now, I think it will be the wisdom of the MPC members to know what to do at this point, because inflation is already coming down according to those statistics, as I just said earlier. And this is not the time to temper with our interest rate, because cost of borrowing funds will increase and the economy is just recovering. All we are saying is that we have not really entered an expansion economy that says, yes, we are doing so that we can increase interest rate. It's not a time for them to increase interest rate because we are still recovering, and the government is still weak. For that, I don't expect CBN to increase interest rate or monetary policy interest rate on Monday or Tuesday next week. But rather, they might need it also to stay where it is to watch what will happen in the new year, because this is the last MPC for 2021. For me, investors should just take time and invest wisely on those equities that has potential to pay them good dividend, that the yields are more than what's obtainable in fixed income market and also ahead of other inflation. Because if you're entering now, that is almost half of November, it's less than 35 to almost or 45 days to end the year 2021. For me, investors should target those companies that has good dividend pay policy, that will say that they are free result to pay in the market in the first quarter of 2020, so that you position now ahead of the numbers. Because most of the PFAs, they are also not here and there, because they are looking at where is the yield going. Because federal government is about to announce another bond issuance. Are they going to issue the bonds at a lower rate or a higher rate? Because the federal government actually on their own has always high cost of borrowing is there. Therefore, for them to control that high cost of borrowing, they might not borrow on a higher interest rate. They might decide to borrow at a lower rate so that they can manage their high cost of borrowing already that is eating up into our budget. For me, I don't see it going up for real now. Let's watch what will happen in the market between now and end of the year.
Now, finally, before I let you go, the expectations is that that the economy is beginning to recover, and that can be sustained in the third quarter of 2021, which is due to be released at the end of November. How do you think investors will take position now that they know that the economy perhaps has fully recovered?
No, the language fully recovered is that to be also contained, because we are just basing our judgment against the negative position we saw in the line. That's why in Q2 you saw a whooping like 5.01 growth. Also, we're going to measure this third quarter against another negative third quarter again. That means but it is not really recovery, it's not really economic growth, it's not an expansion, this is a recovery. But when we enter expansion, we cannot take of increasing your interest rate. As we speak now, most companies have reduced their output and increased price. That's why they are still posting a positive numbers in the market. For me, it is when you're expanding productivity, you expand your production that you can employ more people. That is when we see economies expanding. Not that you are reducing your production and also letting people away because of you don't need them, because of you are reducing your output. But when you are increasing your output, that is when you need more people. People will engage. That is when the economy is expanding. This is just a recovery. Okay. It is not time for CBN to think of adjusting interest rate up at all.
I said we're going to wrap up, but this came to mind as we wrap up now. Finally, what is likely to trend? What kind of sentiment is likely to trend, given the fact that the MPC meeting will take place next week, and of course, with the numbers we are getting, the inflation rate is coming down gradually, and the interest rate, perhaps, maybe like you said, it may not be tapered, but it might remain the same way.
Yes, for me, you can see that the seesaw movement in the market is a result of to see the outcome of the MPC meeting being the last one for the year. For me, it will be in favor of investors. They do not panic. Rather, we should position in a good stock. Sentiment will remain mixed until after the MPC meeting before you see people jumping fully into the market. Most of them are sitting on the fence to see the outcome of the MPC meeting. Okay,
I think we should leave it there. Thank you so much, Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited. We appreciate you for your time.
Thanks for having me.